Good morning, good afternoon, good evening to you all again. Thank you very much for joining. You're very welcome to this latest event in our Regulator Knowledge Exchange event series entitled Enabling Regulation, Risk Proportionate eKYC, Regulation for Inclusive Instant Payment Systems. And we're delighted to be hosting this event today with the AfricaNenda Foundation. This is the second event we've hosted with the AfricaNenda Foundation, and the first one was probably one of the best events that we've ever done in terms of the audience, the engagement, and the ground that we covered. So I know I'm setting ourselves a high bar for today, but we really enjoy partnering with AfricaNenda, and you're very welcome to those of you who are joining us today. As I mentioned, just in terms of some housekeeping, for our French-speaking audience, please note that French live interpretations are available for this event. You can find guidance on how to access the interpretation channels posted in the chat just now. I'll do my best in French to direct you that way. Si vous voulez nous écouter en français, veuillez cliquer le bouton dans le chat. Si vous avez des problèmes, veuillez nous signaler dans le chat. Alors, I will continue in English, and those of you who would like to have a much better French accent can access that for yourselves. So before we get started, a little bit about me. I am the co-head of the Regulatory Innovation Hub here at the Cambridge Centre for Alternative Finance. My name is Philip Bruin. We lead research, digital tool development, and capacity building programs with financial authorities on the regulation of digital financial services. Prior to joining the centre, I worked at the Financial Conduct Authority in London for many years, including in their Innovation Hub, where I led their international engagement. So sharing best practices with regulators around the world is a long-standing passion of mine. And so very happy to see so many important organisations in this space represented here this afternoon. Events like this are really important for making new connections, strengthening existing ones, and for sharing our experiences and insights with others so that we can all more effectively achieve our objectives. Some quick housekeeping on the screen. This is our agenda for today. We're very blessed and grateful to have some fantastic speakers from around the world. So we'll begin with some opening remarks from Kanwaljit, the Deputy Director at the Digital Public Infrastructure Programme at the Gates Foundation. We'll then have our presentation on the SIPS report with a focus on risk proportionate eKYC regulation from Jacqueline at AfricaNenda Foundation. And then we'll move on to our panel discussion and Q&A, I should say, moderated by Sabine. And we're very grateful to our participants from the Central Bank of Nigeria and the Central Bank of Egypt today. So finally, you're most welcome and indeed encouraged to use the chat throughout the session to ask questions, to share your knowledge and engage with the panelists. As I mentioned, we had a really interactive session last time we did an RKE event with the AfricaNenda Foundation. So please do keep up the good work. So on that note, it's my pleasure, a great pleasure, to welcome our opening speaker for today, Kanwaljit Singh, who is Deputy Director for Digital Public Infrastructure at the Gates Foundation. The development of the RKA really wouldn't be possible without Kanwal and the support and the foresight of the Gates Foundation over the last 4 years. I also know that the topic of eKYC is something that's very dear to Kanwal's heart, and it comes up a lot in our conversations alongside digital identity. So it's my pleasure to pass you the virtual mic, Kanwal, and to share some opening remarks with us on this very important topic. Over to you. Thank you.
Thank you so much, Philip. Good morning, afternoon, and evening, everyone. It is great to be here with you today. I'm really glad we are having this conversation. One of the most powerful things we can do to expand financial inclusion, especially in low and middle income countries, is to make sure that people can prove who they are safely, easily, and remotely. That starts with digital identity. And when we pair digital identity with smart regulation for electronic Know Your Customer or eKYC, we can unlock a whole set of opportunities. That's what today is all about. Before I go any further, I wanted to take a moment to acknowledge the Regulator Knowledge Exchange, or RKE, as Philip alluded to. The Gates Foundation is proud to be a founding supporter along with FCDO. Since it launched in 2022, RKE has grown into a vibrant and peer-led community of 3,000 members, over 300 organizations from 140 countries. And most importantly, it reflects the diversity of the world it serves. Over 75% of members are from low and middle income countries, and nearly half are women. That's exactly the kind of community we need in this moment. So let's pause and ask, why should we focus on digital identity? Because it's foundational infrastructure, like roads or electricity, but for the digital economy. It makes everything else possible, such as accounts, payments, informed consent, verifiable credentials, and digital signatures. When designed well, digital identity systems allow people to verify who they are, even remotely, and do it in a way that is secure, repeatable, and low cost. That's the cornerstone of eKYC. But the impact goes beyond onboarding. When you can authenticate someone with a high level of confidence without them being physically present, you unlock all kinds of use cases that today require physical presence. And if you use your imagination, these use cases could be opening a bank account, getting a SIM card, signing a contract, proving that you are alive for a pension payment, receiving services without having to travel to a public or private office. Now, why is this important? This matters, especially for women, people in rural areas, informal laborers, migrant workers, or smallholder farmers, groups that are often left out simply because they live far away from service points or can't afford to lose a day's wages to stand in line. This is where risk proportionate regulation plays a critical role. Digital infrastructure alone won't fix the problem. In many countries, rigid KYC requirements, even for low-risk transactions, are still a major barrier. And as the recent State of Inclusive Instant Payment Systems report from AfricaNenda shows, even in places with strong instant payment systems, inclusion suffers when identity and eKYC frameworks don't keep up. At the foundation, our strategy is built around something called Digital Public Infrastructure, or DPIs, a set of foundational, open, and interoperable building blocks such as identity, payments, and data exchange. But they only work if the regulators are at the table, shaping policy, building safeguards, and ensuring that these systems serve everyone. I'm very excited about the conversation we are having today. We are joined by leading voices from AfricaNenda Foundation, the Central Bank of Egypt, and the Central Bank of Nigeria, all of whom are actively navigating these issues in real time. As you listen, I encourage you to think about three questions. First one, how do we make sure our identity and eKYC systems work across domestic institutions and across borders? Today, we see a lot of regulatory fragmentation. We have financial regulators, telco regulators, data protection authorities, health regulators. So we need to harmonize how our identity and eKYC systems enable multiple use cases across the digital economy. The second question that I would encourage the audience to think about is, how do we balance the need for trust and its impact on barriers to access, especially for the groups that are often left behind? And finally, the third thing I would like to draw focus on is, how do we keep regulation flexible enough to support innovation while making sure it's effective in grounded in evidence, proportionality, and fairness. I won't take too much of your time. Thank you again for being here and for the important work each of you is doing. Together, we have a real opportunity to make DPIs work better for the people who need them the most. Thank you. I look forward to the conversation.
Thank you very much, thank you, Kanwal. Sorry, just a lag there. For the inspiring words on why all this matters and the foundational building blocks that DPI offers and how important the role of regulators is in making all of this work. And we'll keep our homework in mind. We have these 3 questions to think about as we go through the session today. And again, we truly appreciate all of your and the Gates Foundation's work in making this happen. So I'll now pass over to Jacqueline Jumah at the AfricaNenda Foundation. Jacqueline's going to share with us the presentation on SIPs with a focus on risk proportionate eKYC. Jacqueline is the Director of Advocacy and Capacity Development at AfricaNenda. So over to you, Jacqueline. And a reminder for those of you who have just joined us that there is French translation for you available. All the details are in the chat. And do keep your questions coming. Thank you very much. Over to you, Jacqueline.
Thank you. So in this presentation, we'll look at 2 key aspects. One is revisiting the state of inclusive instant payment systems across the continent and unpack how risk proportionate eKYC frameworks can bridge key gaps, where we'll be highlighting key insights on removing payment access barriers, through risk proportionate eKYC regulation. So first of all, just allow me to briefly introduce the AfricaNenda Foundation. The foundation exists to unlock untapped opportunities to drive financial inclusion by advancing national and regional instant payments infrastructure. And we do this through 2 key pillars. First, by supporting IIPS acceleration, which is inclusive instant payment systems, and scale up. And this involves technical assistance into project visioning and planning, implementing IIPS proofs of concept, program management, as well as leveraging capital into investment-ready inclusive instant payment systems projects. The second pillar involves offering IIPS benchmarking and market systems development interventions to strengthen the capacity for and knowledge of instant payments in Africa's most influential institutions. And of course, through partnering with existing ecosystem actors. And this is also where we support policymakers and regulators in Africa to promote policies and regulations that create an enabling environment for the development of IIPS to accelerate financial inclusion, as well as cross-border payments for continental goals like the digital trade under the AfCFTA, and in general, the digital transformation strategy. In terms of revisiting the SIPs 2024 key insights, we see that IPS, and maybe just to start by distinguishing what I mean by IPS and IIPS, instant payment systems, which is IPS, are designed to facilitate immediate transfers. So looking at the primary goal of facilitating seamless and efficient payment or remittance experiences, eliminating delays associated with traditional funds transfers methodologies. And when you look at the IIPS, which is inclusive instant payment systems, we see that these are built on this rapid transfer capability, but as also specially tailored to promote financial inclusion. Here we see that inclusive instant payment systems aim to bring financial services to the unbanked by ensuring expanded use cases, instruments and channels, multilateral interoperability arrangements, just to unlock all-to-all interoperability between the payment service providers, a focus on interoperability, security, inclusive governance, participation by all instant payments, participation by all scheme participants or the PSPs, and so on. Between 2023 and 2024, the instant payment system landscape in Africa has evolved to include 28 domestic instant payment systems, where we see among these 7 countries, that is Egypt, Ghana, Kenya, Morocco, Nigeria, and South Africa, and Tanzania, having multiple instant payment systems. So we also see that there's notable progress toward inter-scheme interoperability, and several countries are in the process of designing their approaches of ensuring that duplicate systems within the countries work with each other. We could mention a few examples. For example, in Kenya, we see that Kenya is working towards integrating its bank and mobile money systems more seamlessly. And in Tanzania and other countries like in Ghana are way ahead in terms of, having the mobile money operators or, the mobile money players as direct participants. Sorry. From a regional perspective, we see that 6 CEMAC regional, in the CEMAC countries, we see 6 countries sharing one system, that is GMAC Pay. And in addition to this, we have other regional cross-border instant payment systems that are live. That is the PAPS and the SADC transactions cleared on an immediate basis, TCIB. And these 2 are yet to fully roll out their services to all the member states as they intend, but they've made important strides in terms of increasing the number of onboarded participants and are awaiting technical integration. Other regional initiatives include one covering all 15 members of the eKYC. And here we understand that the YMO system is set to interconnect with it. In other regions like the COMESA and the ESC, there are IPS initiatives on the way. And generally, when you look at the 28 domestic and 3 regional IPSs, we have a total of live and operating IPSs comes to 31, which cover 26 countries, where 20 are domestic and 6 are covered by a regional instant payment system with domestic functionality. So moving very quickly to the topic of the day and seeing how regulatory approaches could contribute to access in terms of payments. We'll start by, first of all, appreciating the overview of the KYC process, where KYC here refers to the process of capturing and verifying identity information before allowing customers to transact, essentially. And we see that this process is broken down into 3 main steps. That is sharing attributes, which is basically the customer information, providing credentials, and having customers and having these credentials checked, and then verifying the credentials as well. When conducted electronically, we now have eKYC. And so we see that eKYC can overcome some of the KYC or non-electronic KYC related challenges by replacing the paper-based manual and in-person processes with more reliable electronic alternatives for the 3 steps involved. From the examples, we can see that from these examples, you can see how eKYC, is bringing that additional value of reducing the likelihood of human error, for example, and time and cost savings. The ability to also cross-reference an increased number of data points across multiple sources provides greater robustness and accuracy compared to just the traditional paper-based processes. And we also see that end users may see lower literacy barriers, more affordable services, improved access, and facilitated by remote interactions and less reliance of burdensome documentation and transacting. As part of the CIPS 2024 research, AfricaNenda assessed the countries with an IPS to see whether they allow electronic methods for any or all the steps in a typical KYC process, as stated in the previous slide, for customer onboarding or one-off transactions, which just involve walk-ins that transact occasionally. we see that for end-to-end, for end-to-end eKYC to be in place in a country, the regulations surrounding customer attribute submission, credentials, and verifications, which are the 3 steps, should either explicitly allow electronic processes or should be flexible to ensure that they can accommodate them. From our analysis, we see that many countries are transitioning towards enabling eKYC, even though there are challenges to this context. We see that countries have enabled different elements of eKYC. But what we would like to highlight for now is that we see that 8 countries, which are Egypt, Kenya, Mauritius, Nigeria, Rwanda, South Africa, Tunisia, and Zimbabwe, enable end-to-end eKYC processes, meaning that the 3 steps that we identified in the previous slides have been automated, involving the attributes, credentials, and verifications being fulfilled electronically. Would like to zero in on Mauritius in this case, which shows a great example of how flexible regulations paired with guidance to providers and infrastructure development could unlock eKYC for all. In the case of Mauritius, it facilitates end-to-end eKYC through leveraging the Info Highway platform, which was originally for government services. And here, this facilitates secure data sharing amongst government agencies, reducing the need for document duplication, or where this also emphasizes on the once-only principle, in which citizens only provide documents once. These platforms allows the Central Bank of Mauritius to sign agreements with authorities to expand it for use in the financial sector. And we see the different ways in which it boosts eKYC. First, in terms of the type of attribute submission, where financial institutions must collect key customer details, but also have the flexibility in how and what documents or methods are used for submission. Secondly, in terms of the type of credentials, we see that the regulations do not require a specific credential for identity verification. This then allows the use of reliable documents, data, or electronic methods as approved by the different government authorities. And then within the type of verification, there's a boost in which both the identification and verification can use electronic processes with multiple sources and technologies like biometrics, geotagging, etc. being encouraged to confirm authenticity. And then lastly, when it comes to the type of interaction, remote non-face-to-face onboarding is permitted here and not automatically considered as high risk as we see in many countries. So we get to see that enhanced checks are only needed if customer identity cannot be confirmed or where there's a need to question, to ask further questions or where the documents are suspect. So generally, all countries with a live IPSs have enabled some level of eKYC elements, and many countries are moving towards a progressive regulatory framework. However, some payment service providers still hesitate to adopt eKYC, and we see that in some markets as well, the payment service providers with a more traditional mindset may hesitate in leveraging flexible regulations, even when they are provided. And we also see that electronic customer verification can be challenging to implement in practice if the country's digital ID infrastructure is non-existent or unreliable. And that's why we emphasize on the importance of DPI across across markets. For the remaining markets the remaining markets that are a bit lagging behind in terms of the end-to-end eKYC elements, the largest gap remain in use or in using or in whether to use or not electronic credentials, which are either not allowed or for which there's a lack of guidance around them. In this case, there's no guidance for use. In the case where there's no guidance for usage, there's uncertainty among PSPs on how to comply. And so adopting eKYC becomes a challenge across board. So with this understanding, and maybe just to summarize very quickly as we move into the next session, which is on the panel discussion, is to look at how some insights on how to remove these barriers through risk proportionate eKYC regulation. And here we see the first, for instance, in implementing risk proportionate CDD frameworks, regulators should move to implement a risk-based approach to ensure greater flexibility in their regulatory frameworks, particularly shifting towards outcome-based CDD processes for both banks and non-banks. In terms of permitting electronic credentials, we have seen that so far from the SIPS analysis, nearly half of the jurisdictions still rely on physical credentials in the first instance, and do not allow electronic submissions for attributes, or they don't understand how they should do this. We see that the Financial Action Task Force, the FATF, has published guidelines on the use of digital identity systems for identification and verification of customers in line with CDD. But yet we still see that the regulations being largely written from physical interactions, and so there's a mismatch in the way they can enable eKYC. With the way things are in a majority of the countries, they create uncertainty amongst the payment service providers on whether they could use or not use electronic credentials and how this should go about. So there's an opportunity to permit the use of electronic credentials. In enabling electronic verification, regulators can allow payment service providers to use electronic verification processes and permit flexibility in the choice of methods in line with the country's risk-based approach. To provide regulatory clarity here, there's the opportunity to issue guidance on what these methods could be, particularly in the absence of accessible government databases, as in the case of Mauritius. Regulators can leverage these guidelines on digital ID to facilitate eKYC. Next is on promoting efficient data sharing, as we've seen in the case of Mauritius again, and there's also a good example from the Arab Republic of Egypt. Here, regulators can push to fulfill information sharing requirements as per the FATF recommendations. They can also promote a collaborative approach to CDD that enables PSPs to rely on other regulated payment service providers or service providers for eKYC. For example, through user consent mechanisms for both public and private sector actor data sharing arrangements, or through accreditation of service providers, as in the case of Egypt. With this accreditation, it helps in reducing the institutional due diligence burden on PSPs to allow them to partner with providers. And then lastly, in terms of harmonization, regional bodies should provide regional guidance on how local KYC regulations can be interpreted in the context of eKYC. Because I think there are many, increasingly we are hearing many different interpretations of what eKYC is. So that guidance is critical. And they can also work on harmonizing regulatory and supervisory approaches and practices. Doing so to significantly reduce arbitrage and make it easier and less costly for PSPs to fulfill eKYC in the cross-border payment context, and therefore increase the speed of these cross-border transactions. I'd like to end it here, but I'd encourage all of you to visit the SIPS 2024 report, where we have a deep dive on eKYC and enabling eKYC regulation across board for further insights. So thank you. Over to you, Philip.
Going to pass it straight over to you, Sabine, in the interest of time.
Wonderful. Thank you very much, Jaju. Thank you, Philip. I'm really, really happy to be here today. It's always a pleasure when I have the opportunity to ask questions to regulators, and I've already apologized to them in advance so that I can ask all the questions. So let's have a real talk here. My name is Sabine Mensah. I'm Deputy CEO at AfricaNenda, and I work on our policy agenda as well as capacity building, advocacy, thought leadership. So before we go into the conversation, I'd like to thank the Central Bank of Nigeria and the Central Bank of Egypt, the representative who are going to be participating in this conversation with us. Maybe I'll start with Oluwasola. Please, may I ask you to do a quick introduction of yourself before we move into the questions? Oluwasola.
Thank you, Sabina. My name is Ajewole Oluwasola, a Deputy Director in Development and Finance Institution Supervision Department, Central Bank of Nigeria. I head a division called the division that coordinates the activities of development finance institutions.
Oluwasola, I don't know if it's me, but sometimes I hear you, sometimes I don't hear you very well. So maybe closer to the mic, and let's see if we can continue. Mohamed, may I ask you to introduce yourself, please?
Hello, Sabine. Thank you. My name is Mohamed Abdelrahman. I am heading the Payment Instruments and Acceptance Channels unit at Central Bank of Egypt.
Wonderful. Thank you very much to both of you for accepting to be part of this conversation. Pour le public francophone, je vous rappelle que le webinaire est traduit en français. Vous pouvez aller sur le bouton interprétation et choisir donc la langue de votre choix pour pouvoir contribuer aux discussions. Okay, so back to our conversation. Something I always found very interesting, and I started my career in the remittance industry. So I was processing money transfer transactions at the window. And every single time we ask consumers to take a paper form, to fill the paper form, and then we process the transaction. Your organization will find itself with monstrous amounts of paper that we don't even know where to put. It's amazing how that process of really making sure that we're getting all the information and on paper has been part of the journey in the payment system. I think the way we're gonna facilitate this conversation for me is to always bring a statement from the research we have done, and then challenge both of you to give us your perspective and what's happening in your country. For instance, as Jacqueline has presented earlier, we know from our research that most countries enable some elements of eKYC, but the gap is in understanding whether electronic credentials are accepted or not, and if they are, what's allowed, and what is the guidelines for the payment service providers to be able to onboard. So there's a certain level of uncertainty when the regulation is not holistically giving guidance. So I'm really happy that we have the opportunity to talk to both of you. Mohamed, maybe I'll start with you, just so that, I know instant payment is growing, and I know Egypt particularly is also has an instant payment system and has been really pushing the envelope on this type of market infrastructure. So I'd like to know from your perspective, how critical is seamless digital onboarding of consumers when we are talking about an instant payment system? Where do you stand on risk proportionate eKYC, and how this can help in terms of adoption of these instant payment systems, and perhaps what you've done in Egypt to facilitate the onboarding of new unbanked consumers? Mohamed, to you.
Yes, thank you, Sabine. First, let's have a quick look about the dynamic payment landscape in Egypt. So just to set the scene, we have in Egypt about 68 million cards with more than 50 million mobile wallets and over 1.3 million point of sale terminals. The financial inclusion percentage in Egypt increased from 64 to around 75% in the last two years. When we are talking about digital onboarding, let's agree first that we have two types of digital onboarding. So the first type, targeting existing bank customers. So we need to allow them remote banking services seamlessly without the need to sign any physical documents. And the second approach for the digital onboarding related to bringing unbanked individuals to the financial ecosystem as well. So when we are talking about the first one, which is onboarding existing bank customers seamlessly, Central Bank of Egypt released the instant payment network regulations in October 2021, which was introduced in the first time in the Egyptian market, the digital onboarding to banked customers, and they can use third-party PSPs applications with clear accountability for banks and for PSPs. So the journey was that the consumer will download an application like InstaPay, which is third-party mobile application. They will use their bank card information to register. They will enter their card number and card PIN. The issuer bank will verify his customers through an OTP. Then the consumers can link their accounts remotely, and they can do any transfers either to themselves or to any third party inside the country. Of course, because we are using third-party applications, there are some limits for using PSP's applications to do such transfers as well. However, those limits are waived if the consumers are using the mobile banking or the internet banking of their bank as well. So we have seen huge growth in terms of usage for InstaPay, for example. So in 2 years, we have almost 13 million users performing transactions with more than 2.9 trillion EGB by end of 2024. So this is a huge growth in terms of the digital onboarding for the banked customers. When we are talking about the second dimension, which is serving the unbanked customer, how to onboard new customers to the banking sector in a safe way. So we have tested a lot of fintechs and PSPs solution providers. However, the results was not accurate for Central Bank of Egypt. There are a lot of false positive ratios there. So we have decided to build a new eKYC infrastructure in Egypt to be a backbone. This infrastructure will be connected to the government authority in order to make sure that the ID information, along with the biometric information for the citizen as well, are validated while onboarding. This ensures real-time identity verification as well, reduce onboarding time, improves the customer experience, and mitigate any identity fraud issues, and of course reinforce regulatory compliance issue. So the platforms that's being established now will allow for remote onboarding for the citizens using their official government ID with a liveness detection. There will be a lot of authentication factors used, either a mobile certificate through the mobile or a PIN or biometric verification or with OTP. Of course, multi-factor authentication should be used, not a single factor. The users will be able to share their identity between PSPs or financial institutions as well. Of course, with the customer consent, there will be a centralized email screening in order to make sure that every onboarded customer follows the international and local compliance rule with a multi-channel onboarding as well. So the user can onboard himself remotely from the mobile applications of the banks or from the mobile application for the PSVs as well, or through assisted service points. So this infrastructure will go live within 2025, inshallah, this year. So every banked customer will have one digital financial identity inside Egypt, and he will be able to use this identity to with PSPs or with banks or for further use cases in any governmental usage as well. So I believe the goal is not digital payment itself. It is creating pathways for many to participate in the formal economy for the first time.
Wonderful. Thank you very much, Mohamed. I'm really happy to hear, and I think it's a journey that we will be looking at, lessons and learning as you implement the process. Interestingly, you mentioned, and what I understood is that you're really looking at building a unique identifier for consumers so that they can leverage that in the financial ecosystem. I think it's the right segue for Oluwasola because Nigeria, you've already built that type of infrastructure. So I'd like to hear from you. What's your perspective in building KYC requirements and also justification for eKYC in Nigeria?
Thank you, moderator. Just as Mohamed stated concerning Egypt, in Nigeria also, as time evolves, we have looked at those that are already onboarded, but we discovered that the KYC was not adequate for the other. In 2012, when the National Financial Inclusion Policy,
then I'm struggling with the audio. When you move, I don't hear. Then you move closer, I hear. Help me out. Hopefully, it's not just me.
Okay, can you hear me now?
Perfect.
Okay, I will try to station my head so that I will not be moving. So,
thank you.
When the financial inclusion policy was introduced in 2012, the rate of inclusion then was 64%. And then over time, look at challenges for financial inclusion. One of them was issue of KYC, and then KYC was looked into. And as at 2011, there was what we call Evidence Act, where digital information is available in the law court. So this gave prominence to the use of eKYC. But in 2013, it was discovered that there needs to apply proportionality, as regard KYC in 2013. And that was what led to tiered KYC. We had then three categories. The document is available in the public. We have tier 1, tier 2, tier 3, depend on the sophistication of transaction and the balances in the account of customer. And this also led to the improvement in financial inclusion. As of 2020, the proportion of financial inclusion has gone to 68%. There are a lot of challenges, like issue of infrastructure, like especially network, especially those that are living in either rural area or suburban area. These became issues, and then issue of electronic KYC became prominent. As of 2023, the financial inclusion proportion has increased to 74%, because the issue that we had in the past has been onboarding. So in the past, a lot of challenges we have seen in Nigeria. One of them is infrastructure. Another one is even awareness. Those in rural area, we are not actually aware that they can onboard financial services through the use of, digital, certificate or electronic KYC. So over the year, there are a lot of guidelines in Nigeria, a lot of regulations. We have Open Banking Act, we have Nigeria Data Protection Act that try to safeguard the use of this information. But in 2023, to be specific, there was another document or another law put in place, which is called Consumer Due Diligence, CDD. This gave more prominence to eKYC, that is electronic, and it has made KYC easier, cheaper, faster in Nigeria, and also increase financial inclusion. So over the year, we have come a long way with a number of challenges, but we are trying to surmount them. Presently, we have what we call BVN. BVN stands for Bank Number.
Okay.
It's a unique entity.
See,
okay.
The bank verification number, when you were saying that, I didn't hear. So I'm not sure. Jacqueline, please confirm, is it my internet or we have lapse when Oluwasola is talking?
When he's talking, I confirm it is on and off. Sometimes it's clear, sometimes it's not clear.
All right.
Sorry about that.
Maybe
so you were at the bank verification number. Please continue.
Maybe the past of the infrastructure challenges we have in Nigeria. In 2014, in order to support eKYC, because before then it was hard copy. You have to appear, the snap, but present in 2014, there was introduction of bank verification number. It's a unique identifier for each individual, each person in Nigeria. So that stands for each person. Then at a time, we observe that because you have to use your biometrics, the finger, print, to have that bank verification number, and it must be attached to your account. So there were some little malpractices which, when we did. Then also the issue of facial recognition. When you are onboarding, facial recognition through the technology. So I think in the main city, metropolis, there are no issues with eKYC. So the only area we have issue with eKYC are maybe migrant, the rural dwellers, and women that are not women and men that are not, they have little financial literacy. But I want to tell the whole class that in the last 15 to 10, 15 years, eKYC has become prominent in Nigeria, and it has helped a lot in financial inclusion. Thank you.
Thank you very much. I'm really happy that both of you mentioned some of the challenges, particularly in onboarding remote and underserved consumers. When we ask the questions to non-banks, so the fintechs and the mobile wallet providers, how they interact with the regulatory environment, particularly in terms of eKYC, they did mention that they see some regulatory barriers. They see some issues related to technology infrastructure, as you mentioned, Oluwasola. They also see some constraints in terms of the operations. And I think the biggest finding for us was that remote interactions, remote onboarding is typically viewed by regulator as high risk. So this came out really, really strong for us. So I want to go into the conversation about thinking of the non-bank actors and perhaps also looking at how third-party eKYC providers can come into the mix and help solve or bridge some of these issues in terms of onboarding customers, particularly the unbanked consumers. Also want to understand from your perspective, from a governance mechanism what is the recommendation? How do you enable technical interoperability for payment service providers to be able to verify the identity as quickly as possible when they are onboarding consumers? So, Oluwasola, I don't know if you want to start. And same question for you as well, Mohamed. You are on mute.
In 2013, when we discovered that the level of inclusion was so low, that was what led to tier KYC. Tier KYC means it was proportionate. It was like risk-based, tier KYC. We have level 1, level 2,
okay,
and level 3. We have level 1, level 2, and level 3. For level 1, they don't have documents. Some of them don't have ID card. Then there was no BVN. As at that time, there was no BVN. So what we advise those is that in Africa setting, thank God you are from Africa, we do communality where the head of your community, the head of your association, the head of your clan can speak on your behalf. So if you are learning trade, your masters or your boss could stand for you and be a backup, like a secondary KYC that will be able to speak for you and then be able to register. So as at that point in time, when there was no BVN, there's a secondary person or a boss that will stand for you and will be able to write about you or comment about you. So it's as if the two are brought in, so that two of them can have financial, access to financial services. That was how the rural dwellers, those without adequate documents, that was how they were onboarded as at that time. But with the invention of BVN, bank verification number, as time goes on, they have to attach the BVN to the account. Also, this level 3, there is a cap. There was a cap on the transaction they could do. In a day, you cannot take more than 20,000 naira, and in the account cannot retain more than 200,000 naira. If it is more than that, then you have to upscale your documentation. So this was used for level 3, level 1, level 2, level 3. And this actually helped financial inclusion. For level 3, there was no cap because level 3 has to come with all documents. That has to do with that. And then also issue of governance, compliance. There's a template designed by the CBN for reporting those customers that are on level 1, that are on level 2, and that are on level 3. And supervisor goes to the bank to establish whether those customers were actually level 1, level 2, and level 3. You can migrate from level 1 to 2 when you have more documents, then you can migrate to level 3. Even with eKYC, they still have this structure, But in Nigeria today, BVN is very, very important for all financial services.
Okay.
Thank
You're
you.
breaking up a lot right now. Thank you very much. Mohamed, can you talk to us about third-party eKYC players, and from a governance perspective and transparency, how are you managing this in Egypt?
So, thank you, Sabine. Actually, when we are talking about the interoperability between the PSPs, this is very important. So currently, in the physical world, or in the physical paper, using the physical papers, currently we have simplified KYC procedures and full KYC procedures. So simplified KYC procedures through agents, which are simplified documents to onboard customers in very fast with thresholds as mentioned, and the full KYC without any limits. When we are moving to the central KYC back-end solution, so every customer, either it is onboarded from the fintech applications or from the bank application, will go through a process of automatic verification through the connection with the government authorities. So we are making sure about his ID credentials. We are verifying his face with the biometric data at the Ministry of Interior database as well. In some cases, the fingerprint will be validated as well. So we are making sure that the onboarding is secure. So while transforming to the central solution, there will not be any limits between the customers that will be onboarded from the fintech application and the customers that will be onboarded from the bank application as well. However, when we are talking about the governance, the balance between innovation and security is very important. So I believe the regulators should have a transparent accreditation process for any system. So, for example, there should be some data security standards for the systems that process eKYC transaction, like ISO 27001, for example, compliance and AML rules adherence. In Egypt, we have some rules for this certification process. Of course, we have added some layer like NIST certification in order to make sure that the matcher that will match the photo of the customer with the national database records as well is certified from NIST, for example, in order to make sure about the accuracy of such a verification. Beyond this, we believe that there should be a certification process. So we have a dedicated environment to certify any application that will integrate to the central system in order to make sure that this application maintaining all KPIs specified from the Central Bank of Egypt. So when we are seeing the global practice, we can see framework like EIDAS, Electronic Identification, Authentication and Trust Services, which released from EU, which allow the legal and technical foundation for secure interoperable digital identity cross-border. So I believe we can see within few years that with one digital identity in one country. You can travel across different countries, and through this interoperability as well, you will be able to take financial services to have your same local SIM card in another country through this interoperability. This is very important that the regulator should take care of as well. So when we are talking also about essential regulatory component for central banks, I believe that there should be clear roles and responsibilities, define the PSP roles, the financial institution role, the consumer roles as well, the accountability of the identity data, how the data will be protected, how the encryption mechanism, or what are the consent management rules as well, what are the incident response procedures as well, and of course, the user should have the right to give access his data to a certain PSP or a certain financial institution with transparent dispute resolution process as well, with an adaptive innovation support. So the regulations should evolve with technology while maintaining security, supported by ongoing stakeholder engagement as well. So effective eKYC governance is not just about compliance, it is about creating an ecosystem when innovation thrives within secure boundaries, when institutions can trust interoperability as well, in order to make sure that the benefit of the whole ecosystem.
Wonderful. Yeah, very, very happy to hear that. You know, you talked about interoperability, and just yesterday, I am going to be traveling tonight. So I had to do an online visa processing. And that process actually yesterday was fantastic because I was asked to take a phone, have an application, put the phone on my passport, which had some type of chip, they recognize it, and then boom, in minutes was done. At the same time, we go from country to country, they always scan our passport, there's a machine, it's reading something. That interoperability is already there in this type of convening. But on the payment side, not so easy, especially when we're talking about cross-border payments, and there is not necessarily harmonization into the KYC and eKYC regimes between the different countries. So how do we ensure that, you know, transactions are seamlessly interoperable beyond the barrier, the frontiers of different countries? So good, you know, interoperability is great. I think we'd like to see more of that across Africa, and how regulators are going to come together and work on that will be key. When we ask the private sector, again, the non-bank, one of the things they worry about legal certainty, because there is not clear whether there's an eKYC. Jacqueline mentioned 8 countries that have the full eKYC or remote interaction versus, you know, others would have some of it and not some others. So it is important for stakeholders to have some certainty in the regulatory environment and clear guidelines, because otherwise they will just default to very stringent mechanisms in terms of eKYC coverage. So Oluwasola, I want to bring it back to the fintech, the startup and the PSPs that are in the ecosystem. I'm wondering if there are initiatives in terms of capacity building or opportunities for these type of organizations to adapt advanced eKYC module. How do you feel about AI-driven type of model in terms of liveness detection? I think, Mohamed, you had mentioned that earlier. So what's your perspective, Oluwasola?
Yeah, thank you, moderator. AI-driven system is gaining ground in Nigeria, and policy have been formulated. But the fintechs, which have gone far, some of them are not regulated. Some of them are, while some are regulated, especially those that have to do with payments. Payment, settlement, investment. They were regulated. Investment is by Security and Exchange Commission, while payment and settlement is by Central Bank. But we have others that are not. But the advice we give to them, since they are operating, advice we give to them is that they should come together, have stakeholders engagement, so that they can share ideas, just as this platform we have, which is regulatory knowledge, share ideas, and then make their request known. But for those that are regulated, there are platforms for them, there are guidelines for them, capacity, and then since they are licensed or registered, how to build capacity, there are platforms for them. And also in Africa setting, like issue of African continental free trade, platform also for fintechs, those startups thrive in Africa. In Africa, it's a platform for them to thrive. But I just want to put it, okay? Can you hear me now? I'm sorry. It's technology. We are moving on in Africa. As time goes on, we get it better. It's technology. So I want to just say that in Nigeria, there are fintechs that are regulated. There are some not regulated. But you look at open banking law, cater for both of them, in data sharing and how to collaborate and to get things, done by sharing experiences and knowledge. Regulator will only give you the guideline, provide enabling environment, then the operators will carry out the what they need to do. But in Nigeria, they are encouraged, to come together, build capacity, and then learn from one another while we provide the guideline. That is what we do in Nigeria. Thank you.
Thank you very much. So open banking, data sharing, learning together, bringing the tech together, and hopefully enabling more innovation. Mohamed, I want to come to you, and especially your perspective on technology, whether it's AI or blockchain, with regard to how this can be integrated into an eKYC flow. So maybe you want to share with us what's your perspective on that from Egypt. How do you make these processes consumer-centric, and how do we ensure the consent of the consumer? You had mentioned that also earlier in your introduction, to ensure that, you have my consent to use my data in the process, and how do you leverage other technology capabilities?
Okay, thank you, Sabine. Actually, the technology always play a huge role when we are talking to a topic like eKYC. A lot of technologies can be used inside the mobile applications for the fintech space or banks in order to detect, for example, any suspicious behavior if we are talking about the AI. However, for the customer-centric consent mechanisms, they are very crucial when we want to give control for the users to control their identity data within the eKYC flow. For example, the solution should be designed if there are some SDKs for consent management, so the system should support that the user have given his consent about which data will be accessed, who will access such data, for what purpose this data will be accessed. Of course, this is should be through an audit logs, for example, and there should be also an authentication logs. Those logs should provide some details about the factors of authentication that the users used to give his consent. If Face ID, for example, if biometric verification with a mobile certificate, or it is a PAN with a mobile certificate. So every factor of authentication should be logged. The user should have the right to withdraw his consent for a specific application or service provider or financial institution. So I believe that this approach will ensure Hawaiian institution can leverage a shared digital identity. The customer maintains control over their data, enhancing trust and compliance within the eKYC ecosystem.
All right, so I see a lot of questions are coming in, so we are going to get to the questions, and hopefully I'm not missing any question. I know my colleagues also on the line have been moderating some of the questions. So let me start with the first one I see here. And again, these questions are for both of you. I think there were two questions. One was, are some of these national instant payment system interoperable system in other jurisdiction? I can take that one. At least we have some regional, sub-regional instant payment systems in the CEMAC region with GMAC Pay, TCIB in the SADC region, and so forth. And also the PAP system at the Pan-African level. So it's a good question. I think we can, I can maybe refer you to the SIPS report in terms of looking at where there's a sub-regional interoperability between the different countries. I think the additional question here was to define if the countries with eKYC, is the remote onboarding considered a higher AML CFT risk than the in-person onboarding with additional requirements? Would you like to take the question? So it's a question about, is remote onboarding higher risk than in-person onboarding with additional requirements?
I will give my view in this question.
Sure.
So in my first question, I have differentiated between the digital onboarding of existing customers that already has his data at the bank side, and we are providing the digital onboarding process for him to do banking transactions remotely. So in our case, for example, in our instant payment network, the users can fully digital onboard themselves through the mobile application of InstaPay, for example. There are transaction limits, there are daily limits, there are monthly limits. So it's a kind of tiering. If the user open his mobile banking application and try to do such transfers, those limits are waived. So this is a banked customer already screened. So there is a risk for remote onboarding only. So we are putting some thresholds. However, when we are talking about new banking customer, so this customer has not been screened before from any bank, of course, the risk is higher. This is why, while we are thinking to build a national eKYC utility inside the country, we have embedded an ML screening module inside it in order to simplify the onboarding process at the bank side and at the financial institution as well.
Wonderful. Oluwasola, your perspective?
I will add little to that. The remote is actually considered a little bit risky. I think that because as it is, you don't come and the banker will find it difficult to actually, identify the authentic persons. If I call my name here as Mohamed, it takes you another level of verification to establish whether I am Mohamed. So that is why in Nigeria, we have that unique identifier. So as at today, the risk, the level of the risk is, is coming down or becoming low because if you tell me your name is Mensah, through the remote, I have a technology to verify your BVN, bank verification number, the one you have provided, if it is attached to Mensah, there's another identifier in Nigeria called national identification, number, which of recent is another layer that you need to attach. So of recent, the risk is becoming, either lower than what it used to be then, because there's another level of authentication called BVN. So if you tell me this is your name, I will ask you what is your BVN, and whenever you provide your BVN, I will subject it to another level of test. If it did not matches Mensah, then you are not the one. So I think the level of risk is becoming lower.
All right, thank you very much. There was a question in French on the difficulty of identifying a client remotely. How do you make sure that the documentation presented is really reflecting the person? And to both of your point, I think there's a lot of opportunities in building digital identity as part of digital public infrastructure and leveraging that for the financial ecosystem to enable an easier customer due diligence and eKYC processes as we move forward. And of course, having a unique identifier for individual work. There is a question regarding, it says, considering the fast growth of instant payment system and increasing reliance on remote onboarding, how do regulators and providers strike a balance, particularly with regard to enabling cross-border interoperability? Excuse me, somebody's unmute, please, because we're hearing another conversation. So please, your perspective on how do you strike that balance between, remote onboarding, eKYC, AML, CFT risk, and enabling cross-border and interoperability, and enabling more innovation for the end bank consumers in this ecosystem? We know it's tough for regulators. To you?
Thank you for that question. Aside from the cross-border, I think within the country, the problem between the challenge between remote and then physical or in-person, the risk is fizzing out. It's almost the same now, because no matter the information that you may provide remotely, it is subject to another level of verification. Even your phone number in Nigeria, your phone number is also verified with NCC, Nigerian Communication Commission, to establish if you are truly the owner of that phone number. Even phone number in Nigeria is subject to another level of verification. So in Nigeria today, remote and in-person, there is no difficulty. It is subject to another level of verification. Then for cross-border, which may involve other currency, and then agreement between your country and the other country. I think the African Continental Free Trade is also working in order to make that easy. And African Continental Free Trade Area is actually working concerning cross-border. Then we have colleges of supervisor that is also looking at that. But in supervising banks, once you have done the customer due diligence, the way it is provided, there is no problem, because the report or the files will be examined by the bank supervisor, and the authenticity of those documents will be established. So as far as we're in Nigeria today, the two, there is no, the risk is becoming different. That because there is second level verification of those documents. Thank you.
Wonderful. Thank you very much. Mohamed, your perspective on this and balancing risk and innovation.
Actually, I believe that every country has its own use case. So, and it will be different from country to another country based on how the system will work, what are the procedures. Is this system is using an OCR mechanism only to validate the ID, or it is connected to a national authority, governmental database to make sure about such details? When you see the global benchmark, for example, a country like France, so they have France Digital Identity Program, so which is using hybrid approach to combine community attestation with government-based centralized system solution. So for example, they are using your credential to log into your insurance company as a level of verification, first level. So they have multiple levels. And this is the basic level. In order to increase this, you need to do some additional steps with the different levels of trust, like what is being happened in Nigeria. In Egypt, we have tested before solutions that depending only on the OCR. So the results were not satisfying to Central Bank of Egypt. Of course, the risk is very high in this case. Currently, we are building a connection with the Ministry of Interior. We are decrypting a barcode using a decryption keys as a government database in order to make sure that this is a genuine ID as well. We are using a certified matcher solution ranked from the top 5 solution in order to make sure that this is the correct person. we have put in a rigid certification process for such solution in order to maintain high levels of accuracy as well. However, with the cyber threats around the world and some attacks like deepfake attacks that's appearing recently, I think those measures or those KPIs should be updated by time in order to make sure that everything is secure. There is a risk, of course, when we are onboarding consumers remotely. However, what is the percentage of this risk? Is it calculated risk very minimal risk, or is this high risk with high percentage? This is depending on the model and will vary from one implementation to another implementation in different country.
Wonderful. Philip, I know I am pushing on time. Do I have time for a last question?
Yes,
please?
of course. I mean, I think there's a lot of interest and a lot of participants are still on the session, Sabine. So please keep the wonderful conversation going. Maybe we could finish at 25 past and then we can finish up by 1/2 the hour. So we could run for another 6 or 7 minutes. Just it's always good to be in demand, right? So let's keep going. Thank you.
Okay, wonderful. I know throughout the discussion, both of you at some point have mentioned open banking. So I'm taking the opportunity because I'm here and you are here to just jump into that one. Maybe Mohamed, can you describe to us what are the policy drivers in terms of Egypt open banking agenda? And then of course, we'll come to you, Oluwasola, to also share with us your perspective.
Thank you, Sabine. Let me mention that our instant payment network is built on open APIs and is allowing fintechs and PSPs to be connected easily using the open APIs. And this was a major decision that was taken from Central Bank of Egypt a few years ago to design our instant payment network based on open APIs in order to allow innovation inside the market, to avail a lot of use cases for the consumers, to promote financial inclusion as well. So this is phase 1 of open banking. We are working now, Central Bank of Egypt, as phase 2 of open banking, a full framework for open banking. Will not only allow PSPs to do payments or inquire about balance or the statement of any customer. However, it will open the door for a full innovation inside Egypt.
Excellent. Thank you very much. Oluwasola, your perspective, please.
Thank you. Already in Nigeria, presently, there's an open banking regulation available, deal with how fintechs, financial institutions, PSB can share the information, data of customers. Just as Mohamed put it when we are discussing, the customer consent is key. The consent of the customer is key in sharing data or information. Then when you are, for you to partner with third party, there is need for you to make presentation to the bank to know how you have put measures in place to manage the risk, and that is to do with confidentiality and privacy of data. And you also to provide periodic returns or report to the regulatory body on how you have adopted open banking. But open banking has increased financial inclusion, and also it has made onboarding and financial transactions easy for those that are underserved. Thank you.
So before I ask you for a closing note, I want to share with you some of the recommendations that we at AfricaNenda have come up with as we did this research. We really want to recommend to the ecosystem the implementation of risk proportionate regulatory frameworks for customer due diligence. We also want to really advocate for allowing electronic credentials and electronic submission of attributes, enabling electronic verification, and building really unreliable ID infrastructure with a digital identity. What we've seen, and which remains a key barrier, is the fact that those remote interactions are classified as IRIC. So we are really advocating for regulators to share guidelines when our remote, interaction not necessarily high risk, and whatever the guidelines are for the private financial service providers to abide by, because of the uncertainty bringing a lot of apprehension, I would say, in the practices of the private sector. We are also, of course, promoting efficient data sharing practices. You've both talked about open banking and how we can facilitate innovation on top of data sharing that's, of course, premised on consumer consent. And we are also advocating for harmonization of, KYC, eKYC, consistency across different jurisdictions to enable seamless cross-border payment. So may I ask each of you for your closing word before I turn it to Philip? So Oluwasola, to you.
Thank you. I appreciate this program, and then I'm very happy that I'm here. In Nigeria, Evidence Act has been in place for a very long time. But the major challenge we face with rural dweller is financial literacy, awareness. A good number of them, they are still afraid because it's issue of digital. That issue of digital, they are afraid. So we have been educating them. The banks have also been educating them, to look into that area. Issue of money laundering, combating of financing of terrorism has also come to fore. But the documentation, the customer due diligence has actually taken care of that. Today, we have what we call beneficiary owners. You have to disclose. Then, if there's another layer, today we have what we call beneficiary owners. You have to disclose a lot of things, even the directors of the companies. Then, if a company is owned by a company, you have to disclose the ultimate beneficiary owners. So this has increased financial inclusion, integrity, and also stability in the financial system. I think going forward, the rural dweller need more education and awareness so that they can come out to onboard and use financial services. Thank you.
Seconded. Thank you very much. Mohamed, to you for your closing words.
Thank you. I believe regulators need to think that the governance of any system is not just about the compliance. It is a combination between innovation within secure boundaries and the governance as well. So they need to think about the interoperability, how to build the trust through the transparency as well, while maintaining technical standards and accredited process that maintains the customer at the center of the design. So I believe this approach, if the regulator thought about this while thinking how to build a new regulations or new system for eKYC or allow existing players to work within those boundaries, this is very important.
Thank you very much to both of you, Oluwasola and Mohamed. I really appreciated your patience with me with the questions, and I am going to pass it on to Philip. Philip, thank you very much, and to CCAF for this great platform and enabling a great conversation on eKYC. Thank you. Philip?
Thank you.
Thank you very much. Thank you, Sabine, Oluwasola, and Mohamed for the extensive and extended discussion and for sharing your insights with the more than, I can see, 150 participants who have been with us today on the session. A lot of questions, which I think is an indication of just how important this topic is. So thank you again for covering so well those 3 questions which Kanwaljit at the Gates Foundation set out for us in his opening remarks, and deepening our understanding of how risk proportionate eKYC and digital identity can drive more inclusive access to instant payment systems. We're really looking forward to continuing this collaboration and turning today's dialogue into meaningful progress. And if I may say on the call, maybe perhaps it's for CCAF and AfricaNenda to think about what more we can do to support this area, given the demand and the conversations that we've had today. So watch this space. 2 final notes in closing then. So the first is that if you are a financial regulator, supervisor, or policymaker, you're encouraged to join the Regulator Knowledge Exchange if you're not already a member. This is your global online community, your hub for peer learning and impactful collaboration. The recording from today's event and the slides will be available on the RKE shortly after the event, where you can also access on the RKE AfricaNenda's dedicated knowledge zone, where you can learn more about the SIPS report and the rest of their good work. My colleague will post a link to the RKE in the chat, and you're welcome to refer your colleagues as well. You also have a link to the AfricaNenda YouTube channel in the chat as well. Please do make use of that. The second is to ask you to kindly complete the short poll on the event today, which will help us evaluate future topics and themes for the RKE event series. So please do keep an eye out for those on the RKE through the newsletter and on LinkedIn. And finally, thank you very much for joining us. And for those of you that have stayed around for this extended session, we hope it was useful and productive for you. Please do let us know if we can support you in your work. And otherwise, thank you very much. Have a great day, and we look forward to seeing you on the next RKE event. Thank you.